my hunch has been this year that rates are more likely to fall than to go up. And I thought they were going to fall as recently as last week, and they did. And I promise a week from now, if the whole thing reverses, then I'll mention that. We do get a bunch of economic data next week which can reverse the decline that's taken place in the last 48 hours. This is a holiday week, it's short, there aren't many traders at home, but the forces that have been in play all year long are, if anything, maybe gathering force. And there are two of them. There's the U.S. economy and then there's the outside world. U.S. economic data is just flat. It's not accelerating. There isn't any shred of inflationary pressure in it, except by old metrics that look as though they're not in play. The primary force has been overseas. It's been in play all year long. That force is, if anything, strengthening. And it's in all three important places, which are China, Japan, and Europe. But the story this week, which is embedded in the copy nearby, is an extraordinary paper from the San Francisco Fed. It's short, it's only 3 pages long, and it has some graphs that are good visuals that will help anybody curious about what the Fed is actually thinking about and why, and how it comes up with the level of the Fed funds rate, which is the overnight cost of money. And the charts nearby, and there's a hyperlink to the paper itself in San Francisco. The charts explain a mathematic model known as the Taylor rule and variance that the Fed uses to actually calibrate where the Fed funds rate should be. And one of the Taylor rule models is producing a very powerful signal that says that the Fed ought to have raised its interest rate right now. And yet, just in hunch work, does this feel like an economy or a world in which the Fed needs to saw off arms and legs to make sure that we don't do something bad? It doesn't feel that way. But the math is good, the graphs are good, and here at Thanksgiving, I'll give thanks. Mortgage rates are in the process of trying to crack 4%. We may wind up with a 3 in front for the first time in 18 months. Next week, next Friday, we get jobs data for the month of November. That's the gorilla. It's the one who always tells us where we're going. And based on the October data that came out in the last few days, wouldn't surprise me if that's a lousy number. Enjoy Thanksgiving. Inevitably in the bond market world, bad news produces good news, but the U.S. economy is okay. The action pushing us lower is overseas. Thank you.